everyone, Daniela Cambone here. We hope you are enjoying our Outlook 2025 series. As always, I invite you, if you have any questions about the content, about our experts, or how to be best prepared for 2025 and win and thrive, then I highly urge you to reach out to one of my awesome colleagues at ITM Trading. You can do so by booking a Calendly appointment with them. You can find the link in the description below. Pick the time, the date that best suits you, and someone will be able to walk you through a wealth preservation strategy, building one unique to suit what's best for you, your life, your needs. It's an incredible process, and I urge everyone to do that. Hi, this is Daniela Cambone. Welcome back to the Daniela Cambone Show here on ITM Trading. I am home for the holidays, but we are still producing and putting out content for you all. We have some great interviews planned, and joining me today is Peter Grandich of Peter Grandich and Company. Peter, always good to be with you. Thank you for joining us for our 2025 Outlook and our holiday special.
Always a pleasure and an honor to be with you.
Well, I always say the outlook is super important, and it's something that I've been doing for a few years now because, folks want to know, how should we be preparing for the new year? There definitely is a lot of optimism for the markets right now, as you know, Peter. And that's why I want to bring you on, because you recently had a great tweet that caught my attention where you say, we're in the period of do not say anything that's bad. You say it usually starts around Thanksgiving and goes into New Year's Eve. So I thought, well, let me bring this up amidst all this hopium, is that the US is about to post its largest deficit on record. So in the first 2 months of the fiscal year 2025, the US has already hit an alarming 624 billion. That's up over 64% year over year, even higher than during the pandemic. At this pace, the US deficit could reach 3.5 trillion for the first time in history. Peter, how do you see it? Because there's really two sides to this story now. A lot of people who can't see the negative clouds for the US, and others who maybe are being a little bit more realistic. How should we be confronting things here?
Well, even though I'm in my 41st year, I think we both learn over time that those of us that look into a crystal ball, the only thing we become experts in is how to eat a lot of broken glass. So I don't think for certain I know where it is. I think I can make after 40 years a good educated guess. I'll say this, and first of all, what I had brought up in that tweet, we were just before Thanksgiving. There comes a period of time, all the time on Wall Street between Thanksgiving and New Year, where it's just say no to bah humbug. No one wants to talk about negative, even if it's real. No one certainly wants to bring it up onto financial networks, etc. Then they take us to the Santa Claus rally, and that's supposed to be good. But this year it's an extra because we have the Trump victory, which many people, at least half the people in the United States, really believe has been a major positive, and of course is going to supposedly help the stock market. But you talk about I think the one of the two subjects that even Trump can't overcome, and that is this country is just beyond indebted. 36 trillion. Congressional Budget Office, last place where there's any bipartisanship left, says we're going to 54 trillion. That's without a recession. If you take a $50 trillion deficit, you put a 5% interest rate on it, you have a $2.5 trillion interest expense. The best this country has ever done was a couple of years ago in revenue, just under 5 trillion. So call it 5 trillion. And let's say Trump does magic and Musk does magic as well, and they boost that even up to 6 trillion. The bottom line is almost half of our income is going to go to pay an expense that has to be paid. You can't forget that. So while everybody's all excited now and certainly into the early part of the year, that's still the number one issue that I certainly can't get around, and I think people have to prepare for. And an asterisk to that, Daniela, is the states and cities are far worse because they don't have the printing press or the ability. You look at some states now, take for instance California, the ability to balance its budget is gone beyond possibly. So there are a lot of things wrong about the debt. Then the second biggest problem that I think, and again, it's not being addressed at all, not only not in this say no to bah humbug season, but all the time, is the coming retirement crisis.
Hmm.
65% of Americans are working paycheck to paycheck. They are never going to live that lifestyle that the financial commercials will show them and all, where the last 20 or 25% you live your life in somewhat of a luxury. The problem with that is as they get older, it'll be harder to work. Trust me, for somebody that's 68 now versus when he started, he was 28. But the other issue is they're going to be more dependent on government to help them through at a time when the government itself is going to be. So there are a lot of other issues. And I think the other one, Danielle, I know I'm running on here, but I think this is important. The market is priced for perfection. There is an assumption that it can continue at these highest valuations. Certainly, the discrepancy between valuations placed on U.S. companies and companies outside the U.S. and decent markets, the spread and difference between how markets are valuing them never been greater. There's a level of complacency that I've never seen higher anywhere, not only among investors, but among the investment community. And I think there's an asterisk that's important there. 40% of people who are licensed to give financial advice in the United States right now weren't born when I started in the business. Now, that doesn't mean you can't be very intelligent and be young. The problem is they basically have experienced a one-way market. We have not had any real length of time where markets didn't go up or they didn't go up as much as people have grown accustomed to. And that's the third problem and last problem. We have a planning group, Daniela, you've been doing it for 25 years, and still 7 out of 8 out of 10 families come in. Even the athletes that I once dealt with on a regular basis are living at least one lifestyle above where their finances are. People say, how do they do it? Well, they get more and more into debt. They borrow. They have high car loans, leases. They're deferring maintenance not only to their own health, their home, and they're living a lifestyle. And they've grown accustomed to higher returns that may not be the same in the future. So, all in all, to answer the long-winded question, is getting through this no bah humbug season and getting to the coronation, which it's basically coming, of Trump on January 20th. I still think there's many, many issues that we need to be concerned about.
That is so well said, and I appreciate you taking the time to outline that because I- I'm just concerned, Peter, that many will get blindsided because there's no doubt we're in this historical bubble as you painted. The question is, how much longer can it last? Is it a question of years, a decade? Do you have any intuition?
Yeah, so bubbles tend to last longer than we try to bet against them. So that's why one of the best things that I've said to people, and thankfully I learned the hard way because in the early years I fought it. Now I haven't in the last half of my decade. And that is, it's not how much you're going to make, but it's how much you don't lose, which is going to separate you from the winners versus the losers. So, yes, there's certain things that are crazy. The biggest one is Bitcoin. I call it Bitcoin. I'm not going to participate in it. But there's needless to say that it can still go higher because how it's been created and what people are betting on it. But if we look at some of the things associated with it, and I'm sorry that I even have to say this word on your wonderful show, but to have something called Coin, which is now being more valued than two-thirds of all American corporations. If you want to know when historians look back and they talk about the big bubble at the end of 2024, Coin will be one of the examples of some of the examples that be even worse of this girl that floated this coin and all. I mean, these are the things that take place at heightened levels of valuations and people's excess enthusiasm. But they can go further. It's like a bottle rocket. I don't know if you did it as a kid. Every once in a while, there was a bottle rocket that just went a lot further than most bottle rockets. But they do blow up and they do come crashing back down to earth.
It's the end of humanity as we know it with that fart coin, Peter. Um, Look, we're speaking ahead of the Fed. Also, this Wednesday, investors are betting a final 2024 rate cut this Wednesday is a sure thing. Who knows? But we're saying it's a sure thing. The bigger question is whether the central bank is ready to scale back what it expects to do in 2025. Do you think they're going to stick to the script, Peter?
Well, they've been so off the mark for so long. Let's not forget, this is several years. First of all, they never saw inflation. Then it was a word that's it banned in all Federal Reserve buildings. You can never say the word transitory again if you want to work at the Fed. Then we've had most recently a person that ran the Fed and ran the Treasury who's just been perhaps one of the worst people ever put in charge of any department. And now we have a Fed that says that they're going to mildly approach the reduction of rates. But here's the issue: if and when we get this rate cut on Wednesday, and I think it's correct, I think it's priced in. The problem is we're still going to have the 10-year and 30-year higher than when before they started the cutting the rates. So what do you do then? And when you see two, listen, I appreciate that you call me on as an expert. If you want to really know real experts, try to sit down with Stanley Druckenmiller or Paul Tudor Jones. Those are brilliant men that tomorrow I would give them my money and just say, here, you guys handle it. Both of them have made great observations about the bond market and to be a bond vigilante and to expect higher rates, not lower, irregardless of what the economy may do. So I think the certainty that people have always used the Fed as the Fed put, the Fed will always be there for us. The market can never really get hurt and all. I think that's a dinosaur period. I don't think they have the power or the ability to do that. Now, of course, the Trump enthusiasm can mask that for the first few months out. But he needs to come out of the gate, if I may say, pretty hard and fast. He has to show some real success early on because 2 years from now, or less than 2 years from now, there's another general election. Not only does Congress get voted again, but there is a lot of Senate seats up, and this time there's more Republican seats up. So if he doesn't get out right away and people start pulling back and not 100% behind him, a lot of things that people are betting on and hoping he can succeed at may not happen. And that's where the vulnerability of a hard market correction or actually bear market can be born out of.
I, I know you spoke or tweeted a lot about it, the tariff talk. You weren't happy with that, Peter.
Yeah, there's nothing in history that says getting into tariff wars are good for anybody. And but I think a lot of also is this as we get, we're still a month away from him coming in. I think a lot of this was blustering. Same thing like when people heard, oh, he's going to, anybody is thinking you're going against the dollar, we're never going to trade with you and all. Trust me, he became that comment was another marketing tool for the BRICS to get more countries involved, not to scare them away, but to actually realize, look what he's doing. And now, since then, we've actually taken the interest that we froze from Russia and given it to their enemy. Again, these are the things that are going to be pointed out to countries when they're spoken to about maybe you want to think about working outside the Western world system and kind of coming with us. So a lot of people said that was the death of the BRICS. I think by the next fall, we'll see that not only was it the death, but it was actually an acceleration for them to get even bigger and better.
Hmm. So just feeding the bricks more, Peter.
Yeah, well, you don't want to get into one thing you don't want to do with Trump. You don't want to get into a war of words with him. And I think Putin and the Chinese, I think they know that. I think they've learned that from the first time around and all. But I also think that these are things that are set in motion that don't have reversals in them. There's clear that we continue to see a lesser use of the dollar. In fact, some say it's down to low 50% now
Yeah.
usage and all. That's happening for a reason. And it's not going to all turn around because Trump somehow makes everything better. Again, markets are acting like that. Markets are hoping for that. But markets, when they don't perform on high expectations, that's when you have crashes and hard corrections.
Yep.
And that's the problem with the Trump candidacy now, that not too long after his time in, if he doesn't show a lot of success, markets can become very vulnerable to a very strong downdraft.
How overvalued do you think most stocks are right here, Peter?
Well, that's always a person's opinion. I can tell you this: it's hard for anybody. Well, look at the valuation stocks. They were at one of their lowest levels ever. People are just continuing to buy highly speculative, technology and all, while proven value stocks relative to those valuations are dramatic. For me, I personally don't want to own general equities in the U.S. unless they're related to certain natural resources. I don't have an issue of looking outside the United States to certain countries. I would put an asterisk about Western Europe. I think the EU, as we know it, is finished. And I think the euro will trade at parity as well to the dollar. But I still think the performance of the BRICS and Asia minus Japan is the area where growth will be most over the next 10, 20 years. And I wouldn't have problems owning stocks in Singapore or even some of the Chinese stocks
Yeah.
now where they're being priced.
I've had a few experts on warning that Europe could be the fall of Europe, the next black swan event. Even though the writing is already on the wall. I mean, do you see a collapse of the euro, Peter, of countries going, breaking out, no longer wanting to be part of the euro? What does that look like for you?
Your latter part. I would not. We've already seen a couple, even in Germany, some of the fringe parties now that are getting
Yeah,
more popular, saying that if they win, they're pulling out. Look at Germany. You've been around long enough, even though you started when you were 10 years old. And the bottom line is, Germany, when I started in the business in Japan, were considered the engines that ran the world.
yeah,
They were it. Look at them both now. So, in terms of Western Europe and all, and people who countries like Ireland and others, I see them, Italy too, looking to break away, or certainly not follow the EU in the manner that it's done. And I think a lot of that will be triggered if and when it comes to parity. It's not that far off, it's just 5 cents off. And it's very possible in 2025 we can see parity
yeah.
there because there's nothing to drive interest in Europe, Western Europe at least right now.
Peter, you mentioned the B word before, Bitcoin. Obviously, I want to get more of your thoughts on this in this administration that is quite Bitcoin friendly. I know you have not accepted Bitcoin. I mean, does this give you any change of heart or make you think, all right, maybe it is legitimate?
My feeling to my clients have been until about a month ago was if you want to play it like a high technology stock, play it like that. But it's not the second coming of Christ. It's not going to cure cancer, even though you would think it does based on what the Bitcoin group talks about. But I'm most troubled about its biggest spokespersons. And when you telling people a couple of years ago to sell everything you own, stocks, bonds, real estate, homes, and buy something, you run from people like that. You just don't. No matter what they say, even if they come out somewhat successful, you just don't deal with them. And unfortunately, the biggest spokesperson for them is that person. But separate from that, the argument that it could become a reserve currency is preposterous. Now, I don't want to get into one of those people that the media drags out to argue all these people because this is a cult. And in a cult, you can't tell a cult person anything different. I mean, before Jonestown, if you went to any of those people and said this guy's crazy, they would have told you you're nuts. And yet we know what happened there. Now, I'm not saying people that own Bitcoin are going to commit suicide, but I am saying that it is something that isn't functional for me to be treated as anything other than a total speculation. If you want to do that and think that they can pump it up so much more, go ahead. But I'll take something that worked for a few thousand years. And by the way, just to those Bitcoiners, central banks that are loading up, they're loading up on gold. They're not touching Bitcoin because they recognize in the real world down the road, it's going to be gold and things like gold that are going to help turn the world around, not Bitcoin.
Exactly. And that's my next point I want to bring up with you, Peter, is that it is so interesting that the central banks, Poland, you just saw adding more gold. China has resumed buying. So the central banks loading up on gold, right? And yet I have said repeatedly, the retail investor has kind of taken a pause on gold because, we started by saying there's a lot of optimism for the economy, for the markets, and then they look at what's happening in Bitcoin. How do we get folks to see the light on gold again?
Well, part of that issue, and I'm partly guilty of that, is those of us that were also bullish on gold also owned junior resource stocks, and they didn't perform. And that was like, it's kind of like gold's fault versus looking in the mirror and saying, no, it's my fault. I'm the guy that bought the junior resource stock. But that's part of the reason. But when you get outside of the U.S., especially in Asia, and you like I read purposely Asia financial news to see how the Asians are thinking, Chinese, they look at that metal in a much more positive view and so forth and so on. And they're the people that have been greatly accumulating it. We still see here gold will always be treated poorly by the financial service industry. They treat it like kryptonite because it goes against what they make their living on, which is financial assets. So you're just never going to see somebody come on and tell you to buy stocks, bonds, and also gold. Only when it runs up a lot do we even see a word or two from the financial media about it and all. I think it's performed very well. I think you cannot deny the performance over several decades and the fact that it's still over here and not in front and center tells me it still has a long way to go. My feeling was when it was, you're the main reason I'm back in this business to begin with when you brought me up to Wall Street there several years ago, but at least doing interviews with you. But if you remember then, we were talking about gold at 13, 1400.
I do.
And and when you say now that even with a 2650 or 2700, wherever it is today, it's the same lack of complacency. There's no surefire people, other than a handful of people that have been in it, for 30, 40 years.
Yeah.
And that's why it still has a ways to go. It's when you hear how Bitcoin has become and spoken and
Right.
all, that's when you have to start looking for the exit. We're not even remotely close to that for gold and silver. And by the way, you'll remember it shows I used to get people PO'd because I used to say owning silver was like kissing your sister. I was a big gold person, but never enthusiastic for silver. But silver's fundamentals have changed dramatically now, and you got to keep it on the same level. Yeah, I may still own a little bit more gold than silver, but gold and silver, and of course, my metal for 2025, copper. I think they're all going to have good years, even things like zinc now. So I'm still very, very optimistic with
Yeah.
good sense in my head, not to get caught up in it, that gold, as I said a year ago, will see 3,000 without ever seeing under 2,000.
I think so. I think 3,000 is a no brainer for gold and likely hit it in 2025. But it makes me think, Peter, forget about $1,300 gold. I remember interviewing you when you were always bullish gold, even when it was 800, 600, and talk of $1,000 gold. I remember when John Nadler and company thought $1,000 gold was out of the question.
I
But for
never thought I'd
you,
hear you bring, of all the people, bring up that name, and we'll just leave it at that. But
we'll just leave it because it's an outlook. It's a family special. Um,
the Tokyo Rose of the gold community, yes, never thought it would get much higher, which it did. And
yeah,
thankfully, there were those of us, including Gatter, who spoke up about the manipulation and all. And everybody thought we should wear tinfoil hats. And then, of
yeah,
course, we learned over several years there's been a lot of, and people have been found guilty of it and all. But
yeah.
it's still not going to be centered in the financial community in the U.S. because, and also, there's not a lot of ways for them to make money in it. That's the other thing. They can't keep turning it around. You can't create, a bunch of stuff and all. But
That's exactly what it is, Peter.
it's a very important asset to hold. You have car insurance, you have home insurance. Most people listening to this have a bunch of financial assets. Do they have an insurance policy against that? And that's what you own and go for. Can I just tell you this? I've said for years to clients to come in, and this happens all the time, Danielle. I would only take the time to say this to you. And I say to the clients, looking here at your portfolio, you should own gold, but hope it don't go up. And they pause, and then they turn their head like a puppy and go, Mr. Grandich,
Uh-huh.
why would you want me to buy something that isn't going to go up? And I would
Right.
tell them, of course, if this does go up, what you own is likely to go down. So buy it and hope it doesn't go up. And I don't think that's changed. I think you have to have gold minimally as an insurance policy.
I couldn't have said it better, Peter. Like I said, this is our outlook, and I'm asking all our experts what's really on their radar, what they see as a huge red flag as we head into this year. Peter, is it the drones that are flying up over your home? Is it the war in the Middle East, World War III? What is it that you're really watching and concerned about that we should also be thinking about?
Again, I'm going to go back to that. We've gone through for half of America a trial time. They felt that we would be going down the toilet, so to speak. Now we have those half that thought that think things are going to get better, but the other half that was kind of for that group now thinks this is going to go down. I still say that other than the Civil War, going into the Civil War the United States had, we've not seen this much separation between the American public and beliefs. I don't see any unification of that coming. I don't see any reason to think that's going to change. The other thing that I don't see coming is I don't see anything in Trump's speech, whether blustering or factual or a combination of both, where he sees any austerity on the problem of debt. In fact, you keep talking about all these things, even out today, as before we speak, they're talking about other people are not having to pay taxes and so forth. Well, somebody has to pay for it. Somebody has to. And so I think we are going to continue to have a debt and retirement crisis. I also think there's one other things that people are not talking about, Daniela, but you will within the next 12 to 24 months. The United States is going to suffer a big infrastructure problem.
Mhm.
Infrastructure in America is teetering and deteriorated to the point where studies by independent groups say it could be one of the biggest issues that we faced in decades as Americans. Our bridges, everything about it, our transportation is all in trouble, and that takes a lot of money. And everybody forgets this. The original QE, when Bernanke
Yep.
sat there with Obama,
Yep.
was to be put into infrastructure that would help rebuild
That's right.
America and get us out of the financial crisis. It never got to Main Street. It stayed in Wall Street, that money.
Amen to that, Peter. Thank you for reminding us of that and for sharing that. And anyone who has followed us through these years knows that I've always invite you on for this holiday special to share with our viewers a blessing um, for all of us, if you don't
So,
mind, Peter.
absolutely. First of all, if I may, the meaning of Christmas is really a time to reflect on the birth of Jesus Christ. Now, that's not as popular as it was 40 or 50 years ago, but it is. And we're supposed to give thanks for his love, his joy, and hope that he's brought to the world. It's also time to remember that as we are loved, there are people right now that are not feeling love, and we're to remember them. And that's the three ways that I think is the true meaning of Christmas. One, yes, we're to celebrate, but it's important to remember and help those who are struggling during this season and through the entire year. Two, Christmas is about discovering a personal meaning. What is it really to you? And three, it's very nice to have the parties and be busy in events planning, but it's important to remember who's at the forefront of that celebration. And I'll just close in prayer by saying, Father, Son, Holy Spirit, just Heavenly Father, we just thank you for this grace that we have this ability to be here today. If it wasn't for your love and mercy, none of us would make it. And we also especially thank you for people like Daniela and her organization, who are an independent group who are willing to share not only the good news of life, but also the not so good news that maybe other networks know that there's out there, but won't share with people to get a fair opinion. And we thank you for this in your son's holy name.
Amen to that. Peter, thank you so much. Truly
Well,
means
thank you,
a
Daniela.
lot.
You got a big fan group, and you continue to do. You have phenomenal guesses, and your trip with Frank. I only wish I was there with you.
Next time. He truly is the best, and I am grateful to have folks like Frank, like yourself, in my circle of friends, and I am so grateful that I'm able to communicate with my incredible audience
It's well
uh,
earned, Daniela.
3 times a week,
Anybody
hopefully
that
more in
follows,
2025.
very
Peter,
well
thank
earned.
you so much. Merry Christmas to you and your
Very,
beautiful family, and
and
we'll hopefully catch a Jets game in
do
2025.
you really wanna?
No, no. My
Okay.
husband, Peter, as you know, I think for the first, I don't know how long he's had it now for. I think he's going to give up the season tickets that he's
He's not
had for
alone.
since college.
It's probably going to take a lot of people to do that to get the owner to sell, because that team needs new owners. That's the real
Yeah,
key.
yeah. He doesn't even
Anyway,
want. We don't even
bless
go
the.
to the games anymore. You can't even give away the tickets, Peter.
No, you can't.
Uh, Anyhow, Merry Christmas again and happy holidays. We will still have content for all of you, so be sure to stay tuned to the Daniela Cambone Show here on ITM Trading. Sign up at danielacambone.com so you don't miss a beat, and subscribe to our YouTube channel. That's it for me. We will see you soon.